Hello class, this is the video lecture for Chapter 3, Modified Accrual Accounting. It includes the role of fund balances and budgetary accounting. So this is Chapter 3. So the learning objectives are as follows. There are 4 of them. Describe the basic accounts used by governmental funds. Identify the recognition criteria for revenues and expenditures under modified accrual basis. And I did provide a video about the modified accrual basis and full accrual basis. The third one is apply fund balance classifications for governmental funds. Prepare journal entries for the expenditures cycle using both budgetary and activity-based. So those are the objectives. So modified accrual accounting, the modified accrual basis is a distinct system of accounting that contains financial statement elements that appear nowhere else. Among these are expenditures and fund balances. Again, although revenues appear in the financial statements of accrual and modified accrual funds, revenues follow different recognition criteria between the two bases. Finally, there are no expenses in modified accrual funds. So here's the accounting structure, the permanent accounts. As you can tell, assets, cash and cash equivalents over on the left side, and the liabilities, account payable, accrued liabilities, deferred inflow of resources such as deferred revenues, and then fund balance. Don't forget, if we go assets minus liabilities, we get owner's equity, but in this particular example, or in government and non-for-profit, it's fund balances. So non-dispensable, restricted, committed, assigned, and unassigned are those examples. So nominal accounts. So these are accounts that are closed at the year end. They are budgetary accounts. There's examples over there on the left side: estimates, appropriations, estimated financing, other sources, estimated other financing uses, encumbrances, budgetary funds reserved for encumbrances. Also the financial statement activity accounts, revenues, tax revenues, charges for services, expenditures, other financing sources, and other financing uses. So those are the nominal accounts. Assets and liabilities. Modified accrual funds use the current financial resource measurement focus. And what this means is the assets represent cash and assets that may be expected to be converted into cash in the normal course of operations. That excludes long-term capital assets, okay? Similarly, these funds report only those liabilities which will be settled with current financial resources. Again, it does exclude long-term liabilities. Fund balance is the account category. Fund balance is unique to governmental funds. It serves a purpose similar to retained earnings, and that's in a for-profit organization. In the activity accounts, activity accounts are closed to this account at the end of each accounting period. So interpretation: since only current financial resources and claims against those resources are recognized in these funds, the difference between assets and liabilities, or the fund balance, represents the net resources of the fund that are currently available for future spending. However, even current financial resources vary in the extent to which government managers have discretion over their future use, and this is reflected by assigning fund balance to 5 categories: non-dispensable, restricted, committed, assigned, and unassigned. So those are the categories. The reporting of fund balancing. The objective of fund balance classification is to provide information regarding the availability of the net resources in the fund. Again, the user wants to know whether the use of amounts reported in governmental funds is constrained and how binding those constraints are. So they're definitely going to be tied, and there are constraints. So fund balance appears only in the fund basis statements of the governmental type funds. It does not affect reporting of net position by proprietary or fiduciary funds, okay? It does not affect reporting of net position of government activities in the governmental-wide statements. Fund balance summary. Fund balances of governmental type funds are reported within 5 categories. We talked about this earlier. Non-dispensable, restricted, committed, assigned, and unassigned. 2-step process, okay? So step 1, non-dispensable resources. So step 1, identify those fund resources that are non-dispensable. And non-dispensable resources include most common examples are inventories, prepaid items, also includes assets held for sale and long-term receivables. The principle of the permanent fund. Okay, so the second step, spendable resources, all remaining net resources of a fund after removing those determined to be non-dispensable. So, excuse me, I'm still getting over a cold. Spendable resources are further classified according to the nature of any constraints imposed on their use using a hierarchy of constraints. So here's what it would look like. Here's the hierarchy. Restricted funds, committed funds, unassigned funds, well, assigned funds and then unassigned funds, and then the general fund is at the bottom. So most constraint to no constraint. So typically, if it is like it said, is there's a hierarchy, and a lot of organizations use those unassigned funds because there's not very many constraints on them, such as the general fund. Even the Navajo Nation has a general fund where there aren't very many constraints, and you always see in the Navajo Times about the general fund being used for various different expenditures. So this is an example. So the restricted funds, constraints placed on the use of resources are externally imposed. Debt covenant, grantor, contributors, or other government agencies. Imposed by law, constitutionally, or enabling legislation. Example, forcible requirement that resources be used only for specific purposes, and this is a restricted. Restricted funds, government-wide statement of net position restricted, fund basis, governmental funds sheet, restricted fund balance. In general, the definition of restricted fund balance is nearly identical to that of restricted net position in that government-wide statements. Exemption is permanent fund principle, which is classified as non-dispensable in the governmental funds and restricted in the government-wide statements. So the committed funds, the constraints placed on the use of resources by the formal action of the government's highest level of decision-making authority. GASB specifically identifies contractual obligations as one form of committed resources. There's the rainy day funds. GASB also provides guidance on the classification of budget stabilization or rainy day funds. Such stabilization amounts that meet certain criteria are classified as committed or less commonly restricted if imposed externally or by law. Okay. Rainy day funds are classified as committed only if they are created by a resolution or ordinance that identifies the specific circumstance under which the resources may be expended. And I've also heard of the rainy day funds in like your local government, such as the chapters. They do have funds available, and it has to be created by a resolution. Even local, for example, the city of Farmington also has rainy day funds, and it has to be approved by a resolution. Okay. Rainy day amounts that are available in emergencies or in periods of revenue shortfalls would not be classified as committed unless the emergency or shortfall condition is specified and of a magnitude to distinguish it from events that occur routinely. Rainy day funds not meeting these conditions are reported as unassigned fund balance in the general fund. Assigned funds, the government has an express intent to use resources for specific purpose. For governmental funds other than the general fund, this is the category for all remaining positive amounts. For the general fund, assignment conveys a narrow intent use than the general purpose of the government. Let's see. Only the general fund can report a positive unassigned fund balance. For the governmental funds, this is only used for a negative fund balance in any of the previous three constraint categories, okay? So here's the classification. Step one are the assets non-dispensable form, e.g. inventory and prepaids are required to maintain permanent fund corpus. Fund balance, non-dispensable, so there's our classification. So no, proceed to the spendable categories. And then supplies inventory, and it says 23,747. Permanent fund principal, 25,000. Okay. So then we say yes for the supplies. So that goes down. Assume the permanent fund corpus is 25,000. Okay. So then are restrictions imposed by outside creditors, grantors, or imposed by law? Then we say yes. And then assume the following: bond sinking fund, federal school lunch grant, state highway grant. So the restricted bond for 200,000, 370,000, and 302,000. So there's the fund balance. So committed funds: has city council formally committed funds to specific activity? Then yes, and notice it says cash and cash equivalents under the assets. Committed construction contracts for 120,000, and school construction for 450,000, and rainy day funds for $3.5 million. Okay, those are some specific examples in the fund balance. Assume the following: construction contracts. I just talked about this already. So assigned funds are there positive residual balances in non-general fund governmental funds? Yes, and this is in our receivables. School lunch program, $202,014. Capital projects, $40,032. Debt service, $30,000, and other purposes, $366. Okay, assigned funds again. Capital projects, so under the general fund there's $775,000, and library acquisitions, $25,000. So those were the additions. Assume the government has outstanding encumbrances for the following. So then it's outstanding, we don't know yet, so we haven't encumbered it. So those are the following. That's why we put it on there. All negative unassigned funds, all negative restricted, committed, or unassigned net resources are classified or unassigned. The remaining net resources of the general fund are classified as unassigned. So unassigned will be $707,634,833. So that would be unassigned. So classification completed. As you can see right there, inventory, supplies. That was what we just went through. If we were to break those and all those little individual adjustments that we did, or those classifications, and then the total fund balance is $11,278,580. Special revenue fund is $572,000. Capital projects $912,000. Debt service fund, excuse me, $230,000, and then the permanent fund $25,000 and change. So GASB fund balances and encumbrances. Under past reporting practices, outstanding encumbrances at year-end were reported in governmental funds as fund balance, a reserve for encumbrances. GASB requires that significant encumbrances be disclosed in the notes along with required disclosures about other commitments. However, there is no separate reporting for encumbrances within the fund balance section of the governmental funds balance sheet. Rather, encumbered resources should be reported within the restricted, committed, or unassigned categories in a manner consistent with the criteria for those classifications. GASB fund balances, again, encumbrances, interpretation. At the very least, the existence of an encumbrance suggests that the government has an express intent to use the resources for a particular purpose, and therefore these resources should not be classified as unassigned. Encumbrances accounting may also be used in the case of contractual obligations such as construction contracts. GASB requires that resources obligated to contractual obligations be classified as committed. Okay, I'm going to end this video right here, so I'll do two 15-minute videos. So I'll finish up the lecture on video 2.